Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Welcome to the show today. We're so glad you're here. You know, if you have a life insurance policy like I do, you might be wondering how the life insurance payout actually works and what to expect in that situation. The same goes if you are the beneficiary of someone else's life insurance policy. The passing of a loved one is already a stressful time, and understanding how life insurance payouts work beforehand can provide maybe a little bit of comfort during a tumultuous time in your life. Well, first of all, what is life insurance, and then do you actually need it? At its simplest, life insurance is a contract between you and the insurance company. With term life insurance, you make monthly payments for a specific time period or term, generally between 10 and 30 years. If you, the insured, die before the end of the term, the insurance company will pay out the agreed-upon death benefit to your beneficiaries. If you live through the end of the term, the insurance company will keep all the monthly premiums. Deciding how much insurance you need and the right length of term will depend on your specific situation. As a general rule, life insurance makes the most sense if you have dependents or other obligations that depend on your income. One of the classic examples is if you have young children and/or a stay-at-home spouse that depends on the salary that you earn. If you pass away unexpectedly, you want to make sure that your dependents are taken care of. So that said, how do life insurance payouts actually work? When someone with life insurance passes away, their beneficiaries usually have a couple of different options to receive the death benefit. Here are some of the most common life insurance payout options. First, a lump sum fixed amount. A lump sum payout is by far the most common type of life insurance payout. If you are the beneficiary of a $500,000 life insurance policy, taking this option will give you a one-time payment of $500,000. Generally, the payment will be considered tax-free. Installment payout. You can also choose to take the payment over a certain number of years. This might be an attractive option if you are concerned about spending all the money at once. Instead of taking a $500,000 lump sum, you could choose to take a $25,000 payment for the next 20 years. You will still owe tax on any interest received. Retained asset account. So with a retained asset account, you leave the death benefit in an interest-bearing account with the insurance company. You can then access the money in the account with a checkbook or even a debit card. Annuity. Yeah, another option you may have heard of would be to convert your life insurance to an annuity. With an annuity, you'll receive guaranteed payments for the rest of your life. The exact amount of your payments will depend on your age and the amount of the insurance payout. So when will you receive a life insurance payout? That's the big question. The first step to receive the payout from your life insurance policy is to file a claim with your insurance company. If you're not sure how to file a death benefit claim, you can work with your life insurance agent. Once you've filed a claim and submitted any necessary paperwork, the processing of your claim usually only takes a matter of a few days or weeks. Most insurance companies understand that prompt payout of claims is a very important factor in their customer service. And then what can actually delay a life insurance payout? While insurance companies generally pay out very quickly, even within days or weeks of filing a claim, there are a couple of scenarios that can delay a life insurance payout. One is if the insured person dies within 2 years of purchasing the policy and the insurance company suspects fraud, including misstatements or false information on the initial insurance application. Another is if the insurance company has trouble locating the beneficiaries of the policy. Also, if there are suspicious circumstances surrounding the death, the insurance company may delay paying out the death benefit to make sure that none of the beneficiaries are charged with a crime relating to the death. If a life insurance claim is denied, typically the beneficiaries will just receive the amount that was paid in premiums. The good news is that these types of denials are very rare, and in most cases, the insurance payout will be processed within a matter of a few days or weeks. The bottom line? Most reputable life insurance companies want to make sure that the payout process is as seamless and quick as possible. The passing of a loved one is a trying time for everyone involved, and most insurance companies understand their role in helping to ease some of the burdens when a loved one dies. Now, one thing you can do to help speed up the insurance payout process is to make sure that your beneficiary information is up to date. Once you file an insurance claim, your insurer will usually issue a payout within a matter of days or even a few weeks. You have several different options for how you actually receive your insurance payout too. Now, the most common is a lump sum payment for the full amount of the policy. In most cases, the insurer will issue the payment directly to your bank account. Though receiving the payout by check is also a possibility. Generally, the proceeds of a life insurance policy are tax-free to the beneficiaries. Besides a one-time payment, there may be some other payout options available to you too. Talk with your friends, family members, life insurance agent, or even a financial advisor to determine the right payout method for your specific situation. And if you have any questions, you want to know more about this, you can always check out thecollegeinvestor.com. We have some really cool resources and articles for you to check out about life insurance. We even have a comparison of whole life versus term life insurance and what we think about it. You can find that at thecollegeinvestor.com. Thanks again for stopping by today. We'll talk to you again real soon.